What's up, guys? This is Carter Thomas with Coin Mastery TV. Welcome back. Please go to coinmastery.com/invest so that you can get your own PDF of how to get into this market effectively. And we'll also send you some tips on exactly which coins we recommend people get started with, how to do all that great stuff. A lot of helpful info that I think you'll find very valuable. And then you can come back and watch these YouTube videos, listen to the podcast. Thank you all for joining us. And most importantly, thank you all for all your help sharing these videos and podcasts on Twitter and the YouTube and Facebook and everything. Looks like the algorithm kicked back in and we are back on track, so we can keep spreading the word about crypto, about dominating, about building generational wealth and making huge Lambo-fueled great things happening. Just kidding. That's not really what we're here to do. We're here to help you make better decisions so that you can make more money with what I consider to be the greatest financial revolution and opportunity of our lifetimes. Today, we're talking about some interesting stuff. A little bit about Bitcoin. We can talk a little bit about what's going on in the altcoin market. I wish I should start doing a graph on how many messages come in, and nothing wrong with it. I mean, I love that you guys hit me up. I wish I was better at responding, but I'm working on a bunch of other stuff. But it like as the charts change, you see this huge inflow of new messages. But it's great. I mean, it means you guys are engaged and all that. So we're going to talk about altcoins, which is what a lot of the questions were about. We're going to talk about an interesting article that I thought brought up an idea that I think you'll find interesting. That I'm still working on this idea, but I'm excited to explore this one. And then I want to talk to you about trading strategies. That's what a lot of questions have come in about. Then I want to finally talk about networking and a podcast I was on, which you guys should go listen to. By the way, I interviewed Vinny Lingham last week, and so we're editing that down. That's not going to replace, anytime I interview people, it's not going to replace these daily videos. We'll probably do it, release it on a Saturday or something. The good side of that podcast was that we had a great convo. Vinny's a great guy. He told some stuff about Civic that I didn't realize, that I hadn't thought of, which was really helpful, especially as someone who owns Civic, the coin. The only downside was that, and this was my fault, I should have been more clear about I wanted it to be a little bit longer. We had to stop a little abruptly, so we didn't get to ask a few questions, but I think he'll do a follow-up. But the majority, the 45 minutes we did get, was very insightful, and I think you guys will get a lot of value. So hopefully we'll get that out the next, week or so, but always an experiment. Just trying new stuff, seeing what's going to help you guys the most, what's going to provide you with the most value. Let's dive in. Bitcoin yesterday had an interesting drop, as you guys may have seen, where we saw this kind of you go on Twitter when you see these kind of drops and it's like the apocalypse is happening. You get half the people saying, "Oh, I told you so. Look at this trend line. We're breaking through it. It's the end of the world." And the other half of people are being like, "Oh, what do I do? Or is this the dip? What do I buy?" It's always fun. And what I've learned, and I think that, again, I consider myself a student in many ways in the technical stuff. So when I look at charts, I see a lot that I didn't see 3 months ago. I've learned a lot. I've studied a lot. Still feel like I'm a student, but I have learned about identifying trends and being able to or categorize these particular drops into whatever the trends may be. Now, loosely speaking, and this is by no means an official commentary, technical commentary. Let me zoom out a little bit. I'm going to zoom out to 4 hours here on this chart. Loosely speaking, you can look at trends in many different time frames, and you can draw different conclusions based on those time frames. For example, I'm on the 4-hour chart right now. You could draw a trend from July 16th, which was this bottom, all the way up to the last all-time high, which was, I guess, November 1st or 2nd, which was around 49.80. So you could look at this particular trend, which was a clear trend that had a break in it. So this is established and it's not the current trend. And you can extrapolate what this dip would look like. Now, actually, if you do a Fibonacci retracement, this was right around 50%, and it matched this previous resistance line, the support level. So this was actually textbook, even though it felt like Armageddon when it happened. And if you zoomed out even further, let's go to a one-day chart, you can start to see maybe even longer term trends. It really depends on what you're looking at. Some, for a million reasons, some are better than others. And I'm not going to get into exactly which ones you want to do because that's not really my specialty. But when you zoom in, now I'm on the 1-hour chart, you can start to see these smaller term trends. So what we looked at previously was this July to September trend. Now you can go over to the last dip, which happened September 15th. And I mean, you can go to this one right here, which was on September 18th, and there's a big break. And so you can do a retracement on this. You can try to draw trend lines, whatever it may be. There's a million ways you can slice and dice this. When you look at what happened yesterday, at least when I look at what happened yesterday, other people are going to look at this differently, and nobody's necessarily right or wrong. It's just how you are interpreting the data. I look at this drop, and I tend to think that what's happening up here is part of a bigger trend. The question is it this trend? Is it this trend? Is it this trend, right? And if you're listening on the podcast, I'm pointing to the 3,000 or 2980 dip that happened September 15th, the 3,500 dip that happened on the 22nd, or even the September 27th kind of stall out before it really started to take off. And the more severe the drop, the bigger, the more legit the trend is. I don't know what the word is, but the more valuable or whatever you call it. And so you can do a couple different, measurements, analyses against these zips. But what really matters for you guys as you're listening or watching this is that this little drop in this dip, it really only matters if you're really zoomed in. So if you're just staring at this thing, like we talked about yesterday, if you're on the 5-minute chart and you watch this, it's going to look like a big deal. But in reality, these trends happen on all levels at different time frames. So if you're looking at, like day trading, then yeah, you zoom in and you'll see the same kind of trends really in the micro. But when you zoom out and you realize that you're trading maybe once a week or once a month or once a year or something, it's going to be part of a larger trend. I don't know if it's the one from the 15th. I don't know if it's the one from July. I don't know if it's the one from late September. But one way or another, it's going to drop more than that. I mean, it should drop. And if it doesn't, it's going to continue up and there'll be a new trend line established and it'll drop down from there. The point being is that there's always going to be another big dip. And you're going to know it when the big dip happens. And it may feel like this is a big dip and you don't want to miss it before it goes up to 5,500. But it doesn't matter if it goes up to 5,500 because it's going to dip back again. And when it does dip, it'll then go up to 7,000 or whatever it may be. So you always want to buy the dips, but you also want to make sure that you're buying a big enough dip. That's why it's so important to zoom out. That's why it's important to learn a little bit about technical analysis and even post things on Twitter and just get crucified for good reason because, that's how you learn. That's how you get better. And, I studied a lot the last few days about how to do this stuff, asked a lot of questions. But I think for you guys, if you're sitting there wondering what's going to happen next with Bitcoin, wait for the big dips. Don't wait for these small, you can't make money on these small little dips. You can't. unless you're moving a lot of money, it's just not worth it. What you want to do is identify the different trends, look at the different levels, and do your risk reward on where you think it's which level's got the most merit, right? How strong is the bull trend, and or if there's a bull trend, is this a rising wedge, things like that. So that's the way you got to look at it. Don't worry about these small time dips. I mean, I'm not saying, do what you want. I'm just saying these small time dips are not going to move the needle for you. You are here for huge financial opportunity. Don't waste your time. Don't waste your money chasing these little $100 swings. Like, wait for it to go way down, like 4,200. That's a 50% retracement on this. If this was an established trend, that's what a 50% retracement would be. 38% would be in like the 2,800 range. I don't have the charts up, but like that's the kind of stuff you want to wait for and not be thinking about, oh man, but what if it goes up to what if it goes straight up to 5,700? Don't worry about it. Just wait for the next big dip. Don't, who cares while it goes up? Just wait for it to top out and then start to come down. And then you start looking at, okay, well, when does this look like it's going to come back? The reason why I'm telling you this is something that I've learned in the last few days that has, that's really starting to crystallize it for me, that makes the whole, hey, buy the dip, it kind of takes that to the next level. You realize how that really is, at the end of the day, the best advice you could ever get. Let's look over at the altcoin charts. A lot, good bounce back for the most part. I think the first thing I would tell you, and this is just from watching people on Twitter, when you see these percentage changes, they can be deceiving, right? It's always better to actually open up the coin itself and look at it. So if I opened up Metal and looked at the chart, right, the whatever it was, 8%. It's always variable because you never really know exactly what point it's pulling this from. And that's why it's hard to get a really good sense of what kind of bounce back it's getting in from. But you can see that we are bouncing back in a very good way from the recent sell-off that happened, or whatever it was, the big bull run, uncertainty, whatever the thing was. But that's always a big thing to do. That is what it is. I think that's really important. I think the other big thing to do is as you are picking, we talked about this yesterday a little bit, as you're picking your altcoins, have a plan of what you're going to do with it, right? Like if you're going to buy Vertcoin, I do not own any Vertcoin. I don't know. The only thing I know about Vertcoin is what the atomic swap was done on with Charlie Lee, which that's I don't know if it, do your own research. But if you buy it, right, you see it coming up, and let's say you bought it at 22,500 or whatever, maybe you bought it right now. I don't know. But you got to have a plan already before you buy it. Are you holding this? How long are you going to hold it for? Are you selling it off at a certain price? Do you have a stop loss in place? What are you doing when you buy this? And I talk about this a lot. I'm going to keep talking about this because honestly, the fundamental stuff like this is what helps you not only make money, but keep the money, which is the real challenge for most people, as I learned over the course of many years in entrepreneurship. So if you're going to buy something, know what the plan is, if it goes up, if it goes down, right? Have that in place. You can control that. But everything else from an altcoin standpoint, it's all bouncing back. It looks like there's, right, a little bit of stagnation in this, there's a consolidation, I guess is the better word. Bitcoin, that money's flowing back into altcoins, meaning that there was some semblance of a sell-off. And when you look at that Bittrex conspiracy theory, if it was one person who sold it all off and then bought all this Bitcoin, does that mean that it's one person who's buying it all back up? I mean, obviously I'm generalizing here, but come on, like let's focus on some stuff that really matters here. Let's focus on making real money. So that's what's going on in the altcoin market. Again, guys, I know a lot of you want me to just tell you what to buy and what I'm buying and all that, but that's not going to help you, because I can guarantee in one week, 1 month, we're going to go through something again where it either skyrockets or it dumps. And they're just going to be right back in the situation, and one of the coins may go down, and maybe I had a stop loss that you didn't or whatever. So I'm just trying to help you go through the process of what I'm doing that's helped me make a really amazing amount of money in cryptocurrency so far. So I hope that helps. Let's talk about a few interesting things here. This guy, Kenneth Rogoff, I don't know how you pronounce that, but he's a professor at Harvard, I believe. I don't know this guy. I don't know much about him. I have not done a lot of research about him, but he is making a case that governments are essentially going to regulate crypto down to zero, and that it may survive, but that the current price is going to get massively deflated because of like every government is going to systematically push it down, regulate it, and then we're all going to be, there's going to be, every government has its own, it's kind of like a tax system in that sense, where you can still move it around, but there's gatekeepers everywhere. And this is interesting. I mean, I get it. This guy's obviously way more versed in economics than I am. So I think the first thing is I fully understand that this guy has probably dedicated his life to thinking about economics. So who am I to really compare myself to anything? But what I will say is that the only thing I'm thinking that this doesn't cover is this idea of power arbitrage. And I've talked about this a little bit with Bitcoin Cash and a little bit with the China stuff, but what I don't think this encapsulates is the idea that if Bitcoin really does become a global currency or a global store of value or something like that, if one government regulates it, there is an opportunity cost in time where another government will not regulate it and maybe even promote it to bring miners, to bring the Bitcoin over to their individual country. So there's going to be a flow into other countries that may or may not happen in a legal way. But I think that that's the only thing where he's not taken into account the liquidity factor of how easily it can move across borders and how quickly a country can amass Bitcoin in this sense, or whatever it may be, a currency in this sense, in a way to gain global power, right? That's really what it all comes down to. At the end of the day, like that's really what money is it's a way to measure like the potential to make things happen. That is the 52 laws of power, right? That's one of the biggest ones, is influence. And so I think it's less about everybody in the world is going to think about this. All the governments are going to think about this in terms of, we need to regulate this and we need to control this and everything else, because there's always going to be a government that is willing to not regulate it in order to get on top if Bitcoin becomes a real agreed upon currency, store of wealth. Like it has some sort of exchangeable value that gives it power, or gives the government's power. So I'm interested to watch this unfold, because it makes you realize that China, by being one of the first to have these sweeping regulations, may actually be front running the rest of the world. So that if the US, for example, decides that they're going to put on some heavy regulations onto it, China's already gone through that process. I mean, this is loosely speaking, but they've already done a lot of that. And so they're going to be like, well, we already know what we're doing now. We can actually promote this now that we have these established rules and whatever else. And the US gets bogged down and Bitcoin flows back into China or to Russia or any of these other countries. So I'm super fascinated with how this ends up being the government arbitrage, because we've never had a situation where there's a thing that is not owned by a government, right? It's not a fiat currency that is so easily moved across borders. Things like gold are interesting, but it's physical. Like you actually have to put it on a shipping container and move it or mail it or put it into a piece of jewelry. Like it's not, there are border controls that can somewhat regulate that. This is different. This can move freely, which is why I think that this sort of regulation is a little short-sighted, and it also why the price potentially has so much more resilience than traditional economists think. The same way that people looked at stuff like Amazon or Facebook or Tesla even to a certain extent, and they're like, no company can ever be worth $1 trillion, and a company will be. And it's a website, it's a digital company. And the reason why that was never possible before is because that the speed and the way it can move through the consumer ecosystem, or in this case, the financial ecosystem, was just never a thing before. And when the velocity changes like that, the potential for the market size and the price, just the mental models have to change as well. That's part of fundamental macroeconomics, is expanding that overall pie based on productivity increases, based on technological increases. So I always try to think about that. I always try to think about what is an assumption, or what is a mental limit I have right now that in 5 years will look laughable. So for example, I look back at the internet 5 years ago with Facebook and thinking about like how many posts you might see a day. And if I thought about all the things that Facebook has to offer now, I would just think that's crazy. But looking back, that's not crazy. It's just that's just where we were. Or the App Store. I've built thousands of mobile apps. There was, maybe 100,000 apps in the App Store, tops. And if you were getting 1 million downloads on an app, you were crushing it. I mean, it was an amazing time to be in the App Store in 2011, 2012. But now, there's $70 billion in the App Store. And if you get 1 million downloads, people are like, hey, good job. What'd you do last week? What else did you do in the weekend? It's like, it's a thing you do. So scale changes considerably. And the reason why this is important is I think that the psychological limits of price are way more fungible. They're way more flexible than people think. Just because we've never seen it before, people assume that it's the ceiling, when in reality, it could easily be the $20,000, $50,000, $100,000 price. I'm not saying it will. I'm not making any price predictions about this. But that's what you need to think about for expansion to happen. You need to think in terms of new frontiers, new possibilities. And that's why I love like the Mike Novogratz, the hedge fund guy I tweeted about, because he sees it in a big way, and he's talking about it like it's already happened. And when you see people like that, historically, when you read, I read a lot of autobiographies about titans of industry, about people who have made billions of dollars. And one of the common threads is that they see a future that is way bigger than what is currently considered big, but it's already happened in their head, and they're not trying to figure it out. It's like they're frustrated that we're not moving fast enough to get there. And that's a common thread, and that's why I think that's exactly where I see this market happening. Everyone thinks like, oh my God, it's a $150 billion market cap. That's huge. It came up so quickly. And my response is, yeah, by traditional measures, it's huge, but this has never happened before. So why can't this be $25 trillion? Because that's never happened before either. I mean, in so many words. Anyway, I think it's an important piece for everybody to understand, for you guys listening, for you guys watching, because as you talk to your friends, as you talk to your family members, as you go through your day, as you look at your portfolio, you don't want to be delusional about, oh man, this is going to go, I'm going to make $100 million and life is going to be great. You got to be realistic, but you also need to think as big as you possibly can in order to truly understand the opportunity that's in front of us. That's why I get so excited. And it takes a little while to get used to that thinking for myself, for anybody. But it is important to think about that, and also to look through the lens of people that are not thinking like that. Cool. Next thing is turtle trading. I mentioned this yesterday or Monday, I can't remember, about this idea of if you can only trade 4 times a year. A lot of people hit me up about this. And this is a great overview, this Investopedia article. I'll link to this, obviously, that you guys can go check this out. And I think he has a book, Trading Systems, Run with a Herd or The Lone Wolf. I've not read the book, but it looks interesting. And it lays out a little bit of a framework and the experiment that they did where they took a bunch of traders, I think they're students, and the idea was that make sure things are going up, buy the dip, and you're good to go. But you can only do that 4 times. So you got to really make sure that the dip comes through. And the results speak for themselves. I mean, these guys, they crushed it. But this was done in a different market. This wasn't cryptocurrency. But I think that markets are always the same in many ways. So I'll link to this below. You guys should go check this out. I'm personally really fascinated with these kind of strategies and deep diving into them. So things like this, the index funds, portfolio rebalancing, just buying and holding Bitcoin, or swing trading or Fibonacci retracement. I'm really fascinated in the different ways that people make money, because I think that is a big hole in this market. And this is probably what I will explore on more of like a course thing. If I do a course in the next couple of months, not intro level for people, but this is what I would do, where I would take this and make an 1.5-hour masterclass for you guys that you can follow along. And we would go through this in the crypto markets, put together a plan if you want to, and then go through the list of all the different strategies that everybody could use. And then like every 2 weeks, we do another one, and you can log on and watch it and get the videos. So anyway, I think that this stuff is really interesting. And more importantly, I think that the more you see of this, the more strategies you see, and the more you can learn about, the more you can execute on, the more that you will find something that works for you that leads to the greatest revenue returns that you can possibly get, which is, at the end of the day, that's all that really matters here. It's making you guys a disgusting amount of money. All right, last 2 things. BlockCon. I did not go to BlockCon, or it's happening right now, I should say. Bunch of people did. A couple guys hit me up on Twitter, said they're going. Ty Lopez is down there, he said. He was asking if we were going. Vinny's down there. This is a cool blockchain convention down in LA. Looks like it's a pretty popular one. The reason I'm bringing this up is not to promote this at all. I don't know. Who knows if this is a good one. The reason I'm bringing this up is that for a long time, I personally resisted going to conferences, to meetups, to networking events, because I don't love schmoozing, small talk. It's not my thing. Whatever. And I think based on the conversations and the people I've met in crypto, you're probably like that too. Or you live in a place where it seems like there's not a lot of opportunities to go meet people, right? It's you got to fly somewhere or you got to drive somewhere, and it's just like, what am I doing? And I get it. And the only reason I'm not here is because I'm going out of town for a few days and I need to take care of some stuff. But I would have, not because I get excited about this, but because anytime you put yourself in a situation with like-minded people, you're going to get something out of it. Now, you can't just go and expect people to walk up to you and like blow your mind. Maybe it'll happen. But more importantly, it's just when you're around it, you just start thinking about it, and it gives you all these new ideas, and it gives you all these new, it unlocks all this potential new paths that you can go down that you, in your current life, you just can't think about it, not because you're dumb or anything, but because you just don't, your brain doesn't have the inputs into it. So the reason why this is important for you is you need to find ways to be around other people that are in the cryptocurrency space that are, one, you got to find peers, right? Meetup groups are awesome for that, or that are not online. You got to meet people in person. It makes all the difference. And the second thing is at least once every 6 months, better, more like every month if you can, or every 3 months, you need to go find places where you're around people that are at a different level than you are, better, higher level than you are. And that's why conferences like this can be great, is because you're just around people that are thinking about this in a much different way, typically in a much bigger way. So if you live in Europe, you just commit to getting on a train and going somewhere to do it. If you live in Australia, you fly there, drive there, whatever it may be. If you live in the US, there's plenty of regional events, and it may be an investment, but you got to realize, like, going to this kind of stuff, it may feel uncomfortable, or at least it does for me, to be perfectly honest. But every time that you go, you will get so much out of it. You'll meet so many cool people. You'll think about so many new things that you never thought about. You'll get reinvigorated about what it is you are focused on. It's really important. And I've hosted, I don't know, 4 or 5 big events. Like, you buy the ticket, there's a conference, I've organized a bunch of them. It's I love doing it. It's my time. It's better spent making content and letting these other people do the conferences. So I'm more about meeting people at conferences now. But I would encourage you guys, before you just dismiss that you live too far away, or you don't have the time, or you just go on Twitter or Facebook or YouTube and find people there, before you just dismiss it all, realize that going to these kind of events is a huge leg up. You will meet people, you will get information that will help you, and it's not going to happen in the way you want. Someone's not going to walk up to you and say, oh, hey, here's an amazing tip that you're going to go home and do, and you're going to make 800% return in a weekend. Maybe that'll happen, but that's not what's going to happen. What's going to happen is you're going to just meet people that connect the dots in ways that you haven't seen before, and open you up to new ideas and new opportunities that you just can't get online. It's just the truth. So I'd encourage you all. I'm not saying go to any particular conference. I'm just saying start thinking about that as a required piece of this, right? My goal has always been make $50 million, help people along the way, and then give all that money away. And I know that for me, I can't do that on my own. I can't do that with my own ideas. I need to be around other people, because other people are way smarter than I am in a lot of different ways. And even if it's inconvenient or uncomfortable, it's important. Lastly, Hunter and I had a terrific talk. Hunter's got a podcast where it's more for like investors, cash flow investors. A lot of them are real estate investors, but the what do you call it? There's obviously demand for crypto. And so we got on, we chatted, and it was great. And I think that, so one, I'll put the link, SoundCloud, go listen to it, because I think this can be a good one you can send to your friends and say, hey, look, this is a good introduction to cryptocurrency as an investment type of situation. It's probably not my best performance, but it gets the job done. And two, if you listen to this, I think that this is what I'm talking about when I say we need to get more people to go buy some Bitcoin. And I'm not saying we need to go, hammer on our friends and say, you got to go buy this, you got to go buy this to get the price up. You buy this as a complement to an investment portfolio. And especially at the end, he asks me, do you have any advice? And I tell it, like, go buy a little Bitcoin. Go buy $500 worth, go buy $200 worth of Bitcoin, because you got to just be in the game. And this, for you guys, right? We are all trying to push this market up. Not even push, we want people to be involved as the big money comes in, as everything comes in. And this hopefully shows you guys an example of the kind of stuff that I will do on top of Coin Mastery that can get that message out. I also think Hunter's a great guy. This was a fun podcast. You should go listen to it anyway. With that, Wednesday, hump day. I'm fired up today. I feel good. I'm ready to go crush. So thanks for watching, everybody. Make sure you hit that subscribe button. Share this with a friend. I will see you tomorrow. Peace out.